Hey, welcome back to another edition of Forex Tech Magazine. This is your host, Lewis. Glad you guys can join us. Before we get too far into this, I just want to put out the disclaimer real quick. Any and all information that's given to you by us should be considered educational and informational purposes only, or educational and entertainment purposes, rather, only. Right? If you're in need of financial advice, then our suggestion to you would be to seek the assistance of a licensed, competent advisor. And hello there, Grind More, Sleep Less. And hello, can we get the show started? Absolutely, we can get the show started. Just making some last minute touches so that way we can have a pretty good, exciting show for you guys today. So that way you can learn how to make some additional coin for yourself since we got the holidays coming up, and I'm pretty sure everybody can use a little bit more money in their bank account. All right, so now let's get in here and let's go ahead and get into why you came here in the first place. All right, we're going to jump out of this right here. This is our, let's see, Euro US dollar. We don't want to be in this. We want to go over to our Great Britain pound pairs. And if you notice here at the bottom of the screen, we have opened the trades that we are currently in right now. We're up, what was that, $514, $513. It just keeps flipping around here a little bit. And we'll talk about these pairs as well. Right now, we still have on the trades that we had on from the day before, which is the Great Britain pound Japanese yen, the Great Britain pound US dollar, and the Great Britain pound Canadian dollar. Everything is moving right along according to plan, except for, of course, the Japanese yen, which I hate that currency, but that's another story. We'll talk about that later. So let's look at the first pair here. I'm going to minimize the screen because I don't really need to know how much money I'm making because I know I'm making money. Minimize that. And once again, if you notice right here, I've already got the support and resistance lines drawn out on this particular screen. And just kind of keep in mind what we talked about before, which is why we use support and resistance lines in the first place, right? Just like when you go into a mall or you go into a building someplace, usually there's a placard or something on the wall or something in the center when you first walk in to kind of give you an idea of where you are at in regards to the rest of the businesses or rest of the office space. So that way you got a sense of where you're at in you know, in reference to where you're trying to go, right? Same thing with when we go in and we draw these support and resistance lines, because it's important for us to know whether we are, you know, picking up steam where buyers are coming in at a place of support or sellers coming in at a place of resistance, right? Or vice versa, right? Because then that's going to help give you more confirmation whether or not you should be buying or selling this particular market, right? So when we look at this particular market right here, we see a couple things that's going on, right? One, we see our support resistance lines, right? We got 5 of them on board here. We see where price has actually come down to this support line, is bounced up, right? And now the question is, will price continue to bounce up? We see where it has for a while now. This is all the way back in October the 10th. Looks like it's been moving down pretty consistently, and now it's hit this support line. The other thing that I noticed about this too, and I don't know if you picked up on that or not, is this fib retractment, right? And if you see right here, right, it's made its extension all the way down to this fib line, the 1.618 extension, right? So it made a B. The C move is the retractment, which is it pulled back and it hit that resistance slash support line, right? And then from there, it bounced all the way down to the D. And so 2 things has happened here. 1 is hit a support line. 2 is hit a Fibonacci extension, right? So in my opinion, right, this could definitely be a U-turn for this particular currency pair, and it could continue to move up. Now, let's look at a couple things, other things too, before we get too excited about that. This has been a, like I said, has been a support that's held up in the past. Overall, it appears that price was moving up, but then it started to move sideways. before we had that sell-off in October. And a lot of the sell-off that you see in the Great Britain pound, a lot of that stuff could just be coming from information that's kind of coming out about the Brexit, right? Because we understand there's a lot of uncertainty and a lot of uncertainty that's coming out about that particular pair, and so it makes the market nervous, and so traders are getting in and out of it without any real type of strategy or real type of plan. It's kind of one of those things where people are just kind of just buying it, seeing what happens, and then jumping out of it the first time they hear something negative. There's a lot of speculative trading going on, and we know that the currency market is already speculative enough. Look at the monthly chart. Yeah, and these support resistance actually held up on the monthly as well, which is really good. I'm gonna tell you, gosh, man, I'm looking at this right here. And I'm not going to say that we're going to be a buy just yet, and here's the reason why. But when I look at this right here, it looks like it could definitely be a buy for this particular pair. Only reason why I'm not going to say it's going to be a buy just yet, certain things that I got to see take place, and what we got to take place is price confirmation. Now, I like the setup, and I love the way that it's adhering to some of the market rules, right? I love how it's adhering to the, finding support, bouncing off support. I love how it's looking at the Fibonacci retracement and is bouncing right there off the Fibonacci retracement, because the Fibonacci retracement is right here, or extension is right here on the support. How everything just really lines up, right? A couple things that you could do here. You could go ahead and buy here, and if you did, you could definitely put your you could put your stop loss back up under, right, this swing low here, right? It's going to be about 150, 130 pips. For some accounts, for most accounts, that's going to be too much. People, like, there's no way in the world I could afford a 150 pip loss. If you're doing $10 a pip, standard lot, what's that's about $1,500 right there that you'd be willing to risk. I don't know if you're willing to risk $1,500 on a trade. If you want to do a lot less, either break that down into something simpler, maybe to a mini or micro account. Or you can always go back in and trade off of the hour chart. You don't have to trade out the dollar chart. What I typically like to see, if we're going to go into a trade, if we're going to be buying into a trade, I like to see a good price move up, all right? And then I like to see a little bit of a retracement, a pullback, all right? And then try to get in after that retracement and price starts moving back up again. So for this particular trade here, that would probably mean something going at least up into this resistance line here, right? The support resistance line here, right? And maybe coming back and bouncing off of it and then going up. That's probably what I would prefer to see, right? Not saying that you can't get in here, not saying that this right here would be a bad trade, because I really do believe that this right here is definitely a U-turn in the market for this particular pair. Now, this could also be a U-turn just because we're going to go into the holiday week for the American market, so there's not going to be much activities coming from, the states over the next couple of days, because people are going out of town, going on vacation, and then they're just not going to be trading, not a lot of money in the market. The market's going to be closed for a couple of days, so that could definitely factor in on this. But here's where you have to be careful, and this is the caveat with this, is that if anything comes out negative over the next couple of days, it's going to have a serious impact on this currency pair and also some of the others, because there's not going to be the money or the energy coming in from the American market to really kind of help balance this out, right? So everything is going to be really kind of predicated off of what's happening in the Euro and Asian market, okay? So if you feel comfortable, go ahead and trade in just the Euro and Asian markets without any type of balance coming in, excuse me, from the American markets, then go ahead and get in, right? Another thing that you might notice is that a lot of people in the American markets is really kind of closing out and putting in their positions today, and probably be doing it again tomorrow, or today. I mean, yesterday and probably today, just because once again it's the holiday coming up, and people don't want to just have a whole bunch of open positions, and they're not at the at their screen monitoring, or they're not able to monitor. They want to be able to go on vacation, and kind of enjoy themselves. So what you might see is some wild swings, especially if price starts to hit certain levels, right? You might see a lot of fluctuation, a lot of wild swings. So this is the time of year where you got to really trade cautiously in the market, and understand what you're trading and why you're trading it. Because if you don't, you can really get hurt up, because you may have done your analysis, everything might be on point, might be doing everything correct, but all it takes is one bad news feed to come out, and all of a sudden, your currency pair is going to get whipsawed all over the place, just because there's a lot of money that's kind of missing from the market as we start to get more into the holiday season, because people are not actively monitoring trades anymore. They're going on vacation, spending time with friends and family, which I don't know why. I think that's all overrated anyway, right? Let's see here. Let's get out of this. So if we look over here on the hourly, I just look on the hourly. We see we had a gap up here. Remember what I told you about gaps? Eventually they got to get closed. That window has to get closed. That window hasn't closed as of yet. Looks like it was a push up. Looks like there's a push back down. What may happen with this currency pair now is that you may see another break back down before it push backs up. All right, that gap needs to close, and we'll see. And that closing of that gap could just be a long candle wick where it comes down and then buyers come back in and pushes back up. Don't know, but definitely something that is interesting and something that we need to pay close attention to, because it can definitely be factored in to our overall trade. So for this one right here, I am going to I want to see how this one here plays out for a little bit, because here's the other factor in too, right? So this right here is obviously a low area because we hit support, right? What we need to do is see it form higher highs and higher lows. It's already looks like it formed a high here. Let's see, this right here is the low. If we can form another higher high above this high, then that might give confirmation that this thing is getting ready to move on up, and then of course we want to be a part of that. If it came from another high higher than that high, I don't necessarily want to be in that trade, because that means it's just going to have a continuation going down. Also remember too what we talked about, dead cat bounce. All right, even though we are at some significant levels here, right? What you don't want to do is have a dead cat bounce. And if you think about a dead cat bounce, it's just taking a dead cat, right, and just like slamming it on the concrete or slamming it on something, and it kind of bounces up a little bit, and it falls back down. Same thing what happens with when you're trading stocks, equities, currencies, or whatever. You have a situation where price sells off significantly. Buyers come in, a couple of buyers come in because they think the price has reached low enough. They'll push the price up for a little ways, but then there's not enough buyers that believe in it to come in and support that original purchase. And so then what you see is price starts to fall back down again, right? And they call it a dead cat bounce because essentially there is no real movement in price. It was just a simple, some people coming in, it was an exhaustion in the sales process, and then price needed to retrace for a little bit. And now price is going to head back into the original direction, which it originally came from, which is down. That could be the case here too as well, because once again it has a significant sell-off over time. But I do believe that this particular pair will, if nothing at all, at least come back to this resistance line here, right? I think it'll come back at least here before or if it makes a move down, because once again we have this completion of this extension. And so what's happening now in the market, right, this C right here is gonna, and this is where your C is at. So you got A, B, C, and then this right here is your D. So this C is going to become your A, this D is going to become your B, and then what the market is going to do now is going to look for another C extension where it pulled back to, and I think where it could be the C extension before it starts making another D extension down, if it's going to continue down, right? Now, if it's going to U-turn and it's going to go completely skyrocket, then what's going to happen, even though we will initially form as A, B, C movement, what's going to happen is instead of the C being the U-turn bounce, it's going to continue to go up, go up, go up, and price will move eventually past this resistance point here, right? And that's going to let us know at that time that this whole downward movement that we were following before is pretty much negated, right? And that the market truly is in an upturn, and that maybe we should be start looking at buying the market, right? Only way to tell will be over the next couple of weeks for that to happen, because this is a daily chart. So we'll, just monitor it and look at it. Maybe something we want to get into at some point in time, maybe not necessarily right now. Maybe, after the holiday move for this particular pair here, right? And remember, you don't have to trade everything every day. Just trade something when it makes sense to you, not necessarily just because you see it up on the board and you say, "Oh, I want to trade something." Okay. Let's see here. Let's get out of this one. Let's look at the next one, which is the Great Britain Pound Canadian Dollar. All right, I love this one. Let's see here. Once again, this currency pair is appearing to be moving sideways, and this is one that we're actually in right now at the moment. All right. So let's examine this right here and look at it kind of closely. One of the reasons why I got into this particular pair is you can see it looks like there is a downward moving currency pair, downward moving progress, right? And this happens back in March of this year. So this has been going. Oops, this has been going on. Come on. This has been going on for a while, right? So it's not like it's something that just started now to happen. Right? So this is not something that just now started to happen. It's not something that's been going on for a while, right? And if you notice, once again, right, that the currency pair is coming down to these major levels of support, going back up, major levels of resistance, coming down to support, going up to resistance, coming down, support, going up to resistance. And what we did, and I say this is major, and I say this is the major support, major resistance and major support, just because these are the outer bands where support and resistance are at for this particular pair and this particular move, right? And then the inside levels are just like minor levels of support and resistance, right? But if you notice, after this strong move down the other day, price hit that support level, and then it began to recover, right? And my analysis says that it should recover somewhere up and around here, right? Now, there's no guarantee that it will, but so far we've been correct, right? We got 3 positive candlesticks going up, and we're making our movement towards our price target. Now, one of the things that we can do here right now, one of the smart things that we can do is put on a risk-free trade. And this is what I always tell you guys about risk-free trades. And the reason why they're good is because you come in, right? And I'm just going to do this now. Whether or not this works out, we'll see. But I'm okay with doing this, right? As I just brought my stop loss. And just look at what I did. I brought my stop loss from being down here, right? So essentially, that stop loss protected me just in case the price went against me. So if price was to doing these numbers, some bad news come out tomorrow or while I'm asleep or whatever, and price, falls 400 and some pips, I was protected by a stop loss that would only allow my account to lose, I think it was like 60 or 70 pips, right? Which was cool. That helps me sleep better, especially when I'm trading, knowing that, if I'm at $10 a pip, 60 or 70 is only $600 or $700, right? Of course, I wouldn't want to lose $600 or $700, but I'd rather lose $600 or $700 than to take this type of a loss right here and lose $4,000, because that's the difference between having an account that I can go back in and trade again the next day, or having something where like, shit, I just lost a big chunk of my money and I don't know if I want to trade again this year, right? So that's why stop losses are important. But now what I've done, because we've got a little bit of space between where we entered in, which is the green line, and where we're at right now, which is right here where this red arrow is at, right? Now that we've got a little bit of space, what I've done is I went in and I put on what we call a risk-free trade, right? So essentially what I did is I took my stop loss and I moved it up, right, past my entry point, all right, and a little bit where we're at right now in the trade. And so essentially, if the trade goes against me, right, no matter what happens right now, I'm going to make money off this trade, right? I cannot lose money on this trade, period. Right? So this trade, all of a sudden, you said, market just takes a dive. Guess what? I make money. I'm in the money. Now, how much money is going to be, I'm not sure exactly because I haven't calculated, but I just know for a fact that no matter what happens in this trade right here, I'm going to come out with a profit. That's how you want to trade. You want to make sure that you have your target, price locked in, right? But you also want to make sure that if the price moves against you and starts moving in the opposite direction, that you're still going to make money, right? That you're still going to be profitable. If you can do this on a consistent basis, then you'll make money on a consistent basis, right? If you just go out there and willy-nilly trade without a plan and just hope is your trading plan, wishing is your trading plan, then guess what, my friend? You're going to be at your job, flipping burgers, wishing that, you could get out of there. Just joking. You'd be somewhere else, still wishing that you could be out of there, right? I'm not saying anything bad about anybody flipping burgers because I, flip burgers myself from time to time when I was coming up, and it's a great job. But if you can make a better life for yourself, better life for your family, why not do it? And you can do that just by being smart when you trade, okay? Now, I don't necessarily like this level that I put in here, but I just did this right here for an example, right? And the reason why I did it for an example, because I just want you to see what a risk-free trade looks like. Typically, if I do a risk-free trade, what I like to do is I like to see a swing low and then put my stop loss below the swing low. Especially if we're in an up move, because I don't have to worry about it too much coming back down, right, below that, unless the market is U-turning. Right now, it looks like the market is just kind of going sideways. Let's see here. Yeah, just kind of going sideways right now. So, I mean, this thing could come back and clip that. I don't know. But at any rate, I don't really care. This is a good learning experience, and this is something good for you guys to see. But typically, yeah, I do like to put my stop loss below swing low, but we're cool. I'm not going to mess with it. If I get stopped out early on this right here, I can always find another entry to get back in here or into another currency pair. That's the other thing too. Always remember, man, there's money to be made in the market. So don't ever get like bogged down thinking that you have to trade any particular currency pair, or do you have to get in at any particular time? You don't, man. You can take your time. The ideal is let the market come to you. Let the setups form, right? And then you take advantage of the setups as they form. A lot of people like to kind of force their ideas and force their analysis on the market, and they want to just try to jump in there and force the market to do something, or hope the market's going to do something that they want it to do, and then it doesn't, and then their account, gets blown up, and then they're upset and they don't want to trade anymore, and blah 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 blah, and it is what it is. But the reality is, when you're trying to force it, it's just not going to happen. You got to let it come to you. You got to have some patience with this, right? It's not something that you can force your will upon, right? But you can, practice your trade and be just a better trader and understand how the market moves. And then that way, when you see these formations set up, you understand where you need to get in at, where you need to get out at. And you know how to make some money, man. Okay? The next one we're in the Great Britain Pound, Japanese Yen. Damn, I hate the Yen, but for all sorts of reasons. I don't want to go into it again. But I will say it's right here. If you look at this setup, once again, we have our support resistance lines placed out for us, right? This is a major area of support, major area of resistance, and these are a minor two in between. And you can see how price has worked through this areas of support and resistance over time. One thing to kind of keep a lookout for this particular pair right here, which I am just now seeing, and this could be kind of scary, is this may be a double top setting up in place. You got a couple things going on here that could be happening, and all right, couple things. One, price is moving down. Price came back up, hit that level of resistance, moved back down again, hit that minor level of support, came back up to resistance, moving back down again. First thing first, right? Rule number one. When price is moving sideways, it's consolidating, right? That means it's not having any real direction in the market. It means that people are kind of still thinking about what they want to do. Buyers or nor sellers have really kind of pushed it in your direction. And usually it could just mean that the market has been overheated for a while and that the buyers and the sellers are kind of looking for direction, the next, move to go. Typically, though, when you see consolidation, 70% of the time, about 70% of the time, the market is going to continue in the direction that it was originally um, going. And if you look at this right here, we see that this is going down, right? So that means that this thing could potentially move down. The other thing that we're looking at here is that here it topped out, right? And here it's topped out, right? This could be considered to be a double top. It also topped out over here as well. That could have been considered to be a double top. The scary thing about a double top is when you see that neckline on the double top, that's where the price had went down from one top and formed a support line and then came back up to form the next top. Is that if price breaks that bottom or breaks that support line, then you get a really good sell-off, right? That could be what's about to happen with this particular pair here, right? If you remember before, one of the reasons why I hate the Japanese yen is just because it is a safe haven currency and people tend to go into that currency in times of stress and crisis, right? And we all know that right now with Brexit, there's a lot of stress and crisis going on because a lot of people are undecided, unsure, and don't really know what to do next because this is kind of an unprecedented move where people don't really know what's going on, right? So that by itself alone could factor in the people uh, shorting this pair, and by shorting I mean people going into the Japanese yen and selling off the Great Britain pound, especially if some negative news comes out. So that could be kind of scary. And when I was looking at this, I'm trying to think, what the hell was I thinking, man? Because I actually got into this and I was buying it, and I think, oh yeah, excuse me. The reason why I was buying this right here was just because I seen this pullback, I seen this bounce off of this minor support, came back up to resistance, and then after we had that really nasty push down the other day, based off of the off of the news feed about the Brexit and whatnot, we had a nice pullback off of that support line, right? And so that kind of led me into, well, you know what? If it's pulling back off the support, then that news feed maybe is not as detrimental to this currency pair as previously thought, and so it should pull back up to resistance somewhere along the line. Well, this right here has been slow to pull back up to resistance. In fact, it's been closer to my stop loss than any other pair that I trade. And matter of fact, that's the one trade that I have that's dragging down my other trades, as you can see right here, right? Everything else is going according to plan. This one right here is the one that's dragging me down. But we got a stop loss in place, so I'm not going to worry about it too much. Over the next 48, 72 hours, we shall see whether or not this thing is going to make a completion and push back up, or if it's going to stall out and swing back down, right? If it swings back down, then expect it to at least come back down to this level of support here. And if it pushes farther, then you can expect a really big break down to this major level of support. That's if it pushes through here. And when I say pushes through here, I don't mean just pierce it like this candle wick did. I'm talking about actually push through, close below this level of support. The next candlestick comes through and it's still closed level, lower than this level of support. Then expect this thing to go ahead and finish to come on down to this next level of support here, right? It's typically how it works. If not, just go ahead and kind of expect it, and which I'm anticipating that this thing's going to go ahead and go back up, push up, and try to retest for this level of resistance up here. That's what I'm anticipating. It's going to retest for that level of resistance. Don't know 100% if it will, but we're going to see. That's what we're betting on. That's what we're banking on here. Okay? If you haven't already gotten into this particular currency pair, it may or may not be something that you want to do. If you do, what I would look at doing is I would look at putting, my stop loss a little bit below that swing low, and so it's about 54 pips of risk, which is not bad, right? Yeah, for 338 pips, risking 54 pips to get 338 pips, not bad. Definitely something I would do. So this right here might not be a bad pair. And remember, when we look to buy, I don't necessarily look to buy at bottoms and stuff because I think that that's just kind of, I think it's very dangerous, and I think that you can lose a ton of money trying to buy at bottoms. I think it's better to just use price action. And what I mean by that, if this really is a bottom, price is going to come back up, and then price is going to at some point in time is going to correct, and then it's going to bounce back up again, and then off of that second bounce up, that's where I would look to. That's why I would look to try to get in it. But to each his own. If you feel confident enough to go in here and buy in, and then put your stop loss there, then go for it. If not, usually I'd wait for that correction and then go up. Because over here it didn't happen. It didn't do the move. Well, it kind of did do the move up. So price went down, price went up, price went up, price came back down again, and then went back up again. So that could be that correction that we was talking about, or even the fact, or kind of did it here too, or even the fact that it's coming down here, right? The price went up, price pulls back, and now this might be the C extension where price pushes back up again. So I don't know. It's one of those things. Whereas you got to look at it, you got to do your own analysis with it, and then you got to really kind of either confirm, or disagree with what I'm telling you, and then you make your own decision based off of your own analysis. What do you think is right for you with the market, right? Man, this thing's getting pelted. That's why I hate the Japanese yen. I hate these kinds of things. Hourly chart, and you can see how close we've come to hitting that stop loss over the last 24 hours, man. It's like, well, thought it was hit right then. Just knew it. Like, man, we're out of this trade. It didn't. It held up. It came through. And then again, about an hour ago, once again, it's like, man, there's no way in hell we're out of this thing. It held up again. So I don't know. We'll see. What? If this thing's gonna hold up, or if this thing's gonna, it's gonna push out on us. Yeah. Hopefully, it holds up, and have an opportunity to make some money on here. If not, we'll make some money with the next one, man. Let's get out of this one. Great Britain pound, Aussie dollar. Let's see what this one's like. This is another one here that, once again, it gapped up. And this is from that Friday to Sunday gap, right? This thing needs to close at some point. And remember what I told you? I mean, that's just what they do, right? It did test up and it hit this resistance, and now it's like it's kind of bouncing off the resistance. So, my own personal opinion, I would expect maybe it to bounce back down to this level here before it pushes back up. Now, it could continue up. I just don't think that it will. I just don't know that it will. Especially given the fact they got that gap there. Now, the gap is not really something you can see on the daily chart. It's just pushing up positive on the daily chart. So I don't know. And the other reason why I don't know too. I mean, look at this chart right here on the daily chart. I mean, once again, it's completed this Fibonacci extension, and typically when you complete the Fibonacci extension, that means you're gonna push back up, right? And with this particular pair, once again, right, we're talking about pushing back up. This extension in this resistance line could be the C. So this is the case, right? So we're saying A, B, and then this is the C right up in here, right? And then it pushed it all the way out to this extension, right? So we know that our C becomes our A, and then our D becomes our B. And so now what we're doing is looking for the next C in this movement, which would be probably around here, right? And then it extends lower. If that's not the case, and this is actually really if this is not the case, and this actually really is a push higher, then what's going to happen is, price is going to continue up, and it'll push past this level here, going on up. But I don't know that that's the case. Hmm. Especially not before the end of the holiday. Especially not before the end of the year. Right here at the end of the year, definitely could see people pushing out of these positions and just really trying to do something that. Hmm, yeah, I think that was the C. So anyway, for this particular pair, I would probably be looking at trying to sell it, man. I'll be honest with you. Right here by the resistance. So now, 50, $60, 50, 60 pips, yeah, give or take, how far you pull back on that. And then we look at our take profit. I'm going to see take profit would be. Sorry, guys. So our take profit. Let's see here. So ABC. Blah, blah. Trying to get levels drawn in here correctly. Let's see. Alright, so what I'm trying to do right now is I'm trying to put my fib extension out here, or my Fibonacci, using the Fibonacci tool. The problem is right now, unfortunately, get out of here, is that I'm gonna have to draw this by hand, which is cool. So yeah, so if we're correct, then that means that 170.32 would be the extension. Does that line up with some type of support or resistance over here? That's the question. Let's see here. There you go. So if we come back over here, we start dropping them. Boom. Boom. Let's see what we got. Bam. Definitely got some levels of support here. I wouldn't try to go for the home run all in one. I don't want to take it. Definitely some levels of support that will support this move. This is where it says that it should be going to. I don't know if it's going to make it there by the end of the year. It could. How many pips away is that? Looks a good bit. It's about 600 pips, give or take. Oh, that's be a rough move. Give or take 600 pips. It's definitely a possibility. The question is, though, will it happen? Right? And that's what we gotta ask ourselves. Will it happen? What's the probability? What's the likelihood of this happening? Given the fact that we're in a downward trend already, downward momentum is already there. I don't see this right here as necessarily being a full-blown reversal. I think this right here could be a just the market taking a breath. And if that's the case, then yeah, we could definitely have this market turning around. I mean, continuing down. Yep. Definitely one to watch. Definitely one to be aware of. See, this right here is killing me. That's this. Oh, this shit sucks so bad. Look at this, man. This thing sucks, I guess. Anyway, I'm not gonna sweat it. Aaron, what's up, man? What's going on? Welcome, my friend. Welcome, welcome, welcome. So what we're doing right now, if you haven't, I don't know where you got in at. Sorry, I wasn't looking at the chat line. I just looked at it just now, but I'm just kind of going over, looking at some currency pairs, doing some analysis, trying to determine whether or not we're going to be trading any of these currency pairs. And then I just look back at my nemesis, which is the anything related to the Japanese yen, which I hate for various reasons. And this right here, out of the three that I'm trading, is the one that's dragging down my account right now, which got me down to only $102, $75, $73, $49. Son of a bitch. I wish you'd go ahead and just hit my stop loss and get me out of my misery here with this one. Shit sucks. We just took a big sell-off. Question is why? Why would it hit a big sell-off? Why would it do this? And if you haven't already noticed, I don't know how long you've been trading or what it is that you necessarily trade, but around the holidays time, you're going to get a lot of fluctuation in the market, and kind of talked about this a little bit earlier. And the reason being is just because there's a lot of people that just kind of sitting on the sidelines during the holidays. They've kind of put their accounts on autopilot because they're going off and spending time with their friends and families, and so therefore they don't have the time or the wherewithal to go out here and start trading. All right. So just kind of expect fluctuation, especially if news, around news feeds. When news come out, the market is really going to swing one way or the other. Let's see here. Blah, blah, blah. What's coming out today? Any significant news coming out today for the Great Britain Pound? Looks like Bank of England is coming out. They're going to be saying some stuff around about 5 a.m. So that could definitely have some impact on it. We do have some news coming out for the U.S., which is the housing starts. Housing starts is always good because that is a leading indicator. Building permits, that's a leading indicator, because if more housing starts, more people are applying for building permits, that means that more people are looking to purchase homes. Right? Builders are confident about that. So that's a positive for the economy. It means the economy is expanding. It means that there's definitely good job creation and there's good income coming in with those jobs, because people will not be purchasing homes Hopefully, if they don't have the money to afford it, you know, we're not going to go back through another 2008, right? So look for that. If those things are positive, then look for a positive response on the U.S. dollar, because then that would mean that then potentially um, inflation would be increasing. And remember that if inflation increased, that is something where we're going to go in and we're going to be raising interest rates, and that will be pushing up the U.S. dollar. So once again, look at that. Today as it comes out, could be positive for us, right? Once again, this one right here, we're having a significant sell-off. Not really sure why. We need to figure out what's going on with this one. We're close to hitting our stop loss on this one. If we do, I'm not going to sweat it. It's going to be what it's going to be. We're only down 279, 222, 221, 194. I'm not sure. It's just fluctuating right now at the moment, right? Just remember, anything lost can be gained, and we're not going to worry about a couple $100, especially when, you know, we're up a couple thousands, right? So let's get out of this one right here. Which one was I just in? I was in the Aussie dollar. All right, so the last one for the night we're going to look at is the Great Britain Pound US dollar, which again, this is one that we are already in right now. Remember, we put on a risk-free trade in our other pair. Let's go ahead and put on a risk-free trade on this one right here too as well. Risk-free trade, essentially what I'm doing is I'm going to move up my stop loss from being way down here, right? And right now, let's cancel that. Right now, with my stop loss being where it's at, I have a 106. So that right there essentially is at $10 a pip. That's about $1,070 potential loss if this price stop moves against me, right? Or if this currency pair moves against me. We bring it up to this nice little low right here, swing low. Boom. So now, no matter what happens, all right, we got a risk-free trade on, so we're guaranteed not to lose money on this currency pair either. So we got 2 trades on right now that we're guaranteed not to lose a dime on, no matter what happens in the market. The one thing I can't guarantee, though, is that we're not going to hit that stop loss tonight. I just put it a little bit below this low candle wick here. And so what price is going to need to do, especially if this thing is going to be moving up, it's going to need to start looking for a U-turn moment at some point in time. Obviously, some type of news just came out for this thing to move as low as it's been moving, and it luckily went up high. Now it's coming back down low again. Something obviously came out. We'll search our news feeds to kind of see what's going on here. And try to see if we can determine what's happening. I mean, if you look over here in the Smart Trader software, we already got some news feeds that automatically kind of populate in here based off of whatever currency pair that we're currently, you know, working on. So we'll continue to search these, read these articles, and also too, you know, we have a couple of different sites that we like to visit, which is FX Street and then Daily FX, which FX Street is one of the main feeds for the Smart Trader. So that we'll just kind of get an idea. It's not going to change anything. It's not going to, you know, do anything to our trade by us knowing what's going on, but it does help us to kind of have a little bit background as far as what's happening. Even though I know that our whole method of trading is based off technical analysis, I always encourage everyone to also take an interest in the fundamental analysis part for currency pair trading, because it's good to have a backstory to what it is that you're trading, so you understand what's going on. Because if I didn't understand the fact that, you know, the whole thing with Brexit, and I'm just trading out here just off of the technicals that I'm seeing, I may be getting misled, because I'm going to be wondering, why am I getting these big price swings, and why, you know, is this happening? Why is that happening? And I'm not going to really understand. And the reason being is because, hey, I did not know about Brexit, and I should know about that, especially if I'm going to be trading in these currency pairs, right? So if that makes sense for you, make sure you keep an eye out on it, okay? But anyway, so looking at this US dollar trade here, let's look at this. Let's pull it up on the daily chart. Boom, boom, bow. All right, so why do we get into this in the first place? Let's look at our support and resistance levels. So you'll see right here we got minor and major support and resistance levels, right? Major support major resistance. This is like a minor support resistance type level here. And we could kind of come in here and put this right here as another, like, minor support, minor resistance / resistance level here, or maybe even bring it down here a little bit lower. But we're not going to do that right now. We're just going to leave it as is and just kind of look at the chart and kind of let the chart tell us what's happening. So right now we're in a period of consolidation, right? And remember what we talked about before, consolidation, 70% of the time price tends to move in the same direction it was originally moving before the consolidation occurred, right? And if you look right here, price is doing what? It's obviously moving lower, right? Because you have a lower high, a lower low, lower high, lower low, lower high, lower low, lower high. So we're moving low, okay? Now we have seen price when it starts to consolidate is bouncing off of this lower support here, coming up to this major resistance, bouncing down a little bit, coming back up to this major resistance, bouncing down again, coming back up to the minor resistance, and now making this move back down. Now the question is, will price continue to move back down to this level of support, or will price push back up and move towards this level of resistance? Well, one of the reasons why we got into this trade in the first place is because we saw the significant drop off, and this came a couple of days ago when some negative information came out about the Great Britain pound. Just looked at it as the market panicking, so to speak, and because the market was panicking, thought it'd be a good opportunity to go ahead and get in there and make a little bit of money for ourselves, right? And so that's what we did, right? The market panicked, so we jumped in, right? Now, we're looking at this as a possible, is the market going to push all the way back up to the levels before the panic, or would the market, just say, okay, yeah, we panicked, we took a little bit of a breather, and now we're going to continue back in the same direction we're at, going back to support. Just kind of looking at these candlesticks, it made a good candlestick a day or two ago. Last night was kind of an indecision, so we call it kind of like a pin. Once again, today is kind of looking to shape up like that as well so far. We'll know more over the next 24, 48 about this particular pair. The good thing is, though, we have a risk-free trade on, so that way, no matter what happens in this particular pair, we're going to still make money. And once again, that's the name of the game. That's what you want to do. That's how you want to trade, is that no matter what happens, whether this thing continues to go up and hit our price target, which we hope that it does, or if it starts to go down, right, and it drops down below this level of support, or this this previous low, we're gonna still be okay because we're gonna make money, right? That's what you want to do. If you can, on every trade that you make it a risk-free trade, then you're guaranteed to make money your whole trading career. If you can't make it a risk-free trade and you have risk out there on the table, then guess what? You have exposure. There's a possibility that you could make money off that particular trade. There's a possibility that you could lose money on that trade. And so what you want to do as a trader, you want to make it as risk-free as possible for yourself. Now, a lot of people don't like doing risk-free trades, and the reason being is just because it's freaking idiots. I don't know. A lot of times because people are greedy. I'm just joking. A lot of times people get greedy, and they feel like that, hey, if I put the stop loss, if I move the stop loss up like this, right? Let's go look at this on an hourly chart. If I move the stop loss up like this, then this thing is going to hit, and I'm not going to make any money. Then what's going to happen? It's just going to come down a little bit, and it's going to take back off again, and I could have made a whole bunch of money. And why would I do that? And the reason why you would do that is because you're not thinking like a trader. You're still thinking like a worker, right? And there's a difference between a worker mentality and a trader's mentality, right? A worker's mentality is, I got to go out and I got to work 40 hours this week, and I got to make as much money as I possibly can because I got bills to do. And the more hours I work, the more money I make, and I'm going to make as much as I possibly can, right? Worker's mentality. Trader's mentality is compound interest, growth off of compound interest. Because we know as a trader that our account grows exponentially. As a worker, your bank accounts or your accounts pretty much grow linearly, right? So that means that, because you're not getting paid a higher rate of return off of your bank account, the only way to really increase your bank account is you got to put in more hours. You got to do more work. And the bigger that paycheck is, right, the bigger your bank account becomes. So it's linear, right? The more you put in, the more it grows, right? With a trader, it grows exponentially. We're looking at compound growth. So we know that we don't necessarily have to go out there and make a big sum of money each and every time that we trade. All we have to do is just make some money each and every time that we trade. And what happens is we're going to compound that growth over time. So even if I made only 30 or 40 pips, let's say it's $300 or $400 off of this particular trade right here, that's okay. It's $300 to $400 that I didn't have to work with yesterday. So now I got $300 or $400 more today to work with than I had the day before. That's freaking awesome, because now what I'm going to do is I'm going to go and get growth off of that $300 or $400, maybe another 10, 15, 20% off of that, right? And then that money that I get that 10 or 15% off of, I'm going to add that back to the pot, and I'm going to get another 10 or 15% off of that. You know, and I'm just going to continue to do that over time. And as I do it over time, the account's going to grow exponentially, because there's a point to which the account hits, right? That all of a sudden, that when you start hitting those numbers, that it just, boom, it just flips. So that's why I say if you can get to the point where you're making risk-free trades, even if you're only profiting a little bit of money, don't worry about it. Take the little bit of money and go, because it's not about making a big lump sum. And that's why you see a lot of these people that go out there and they advertise their systems and they're talking about how good they're doing and they're talking about how much money they made and all that stuff. Whatever. Because if you truly understand how to trade, you understand that it's not about making these big lumps of sums of money all at once. It's about that compound growth, getting it over time. And that's the key to it, my friend. That's the key to making this money and having a long-lasting career in trading. Anyway, guys, listen, I got to get out of here. It is that time. It is 3:59. It's about to be 4 o'clock, and I got to give me something to eat. Maybe go work out for a little bit. Thanks for tuning in. As always, like to leave you something positive. And so I'm going to leave you with this right here. I'm trying to think of something. Oh, yeah. Well, once again, we do it with the great Les Brown, which is always shoot for the moon. And at least that way, if you don't make it, you be amongst the stars. So once again, always, you know, strive to be the best trader that you can be. Strive to be the best person you can be, or whatever it is that you want to be in life. Strive to be the best at that. And even if you don't make it, even if you're not like if you're a musician, even if you're not the best rap artist or the best musician there is, if you put your best effort into it, you will be light years away from everybody else that consider themselves to be your peers or your competition, just because of the effort that you put in. Same thing with trading. If it's something that you want to do, you're serious about, and you want to get to the point where you can quit your job and you can just sit back and you can trade and make money being profitable trading, put the time and put the effort in. When you got time off, when you are, you know, sitting there watching TV or, you know, sitting around playing video games or whatever it is that you may do, put your time, put your effort in to go in and learn more about trading, to learn how to place these trades, learn how to get comfortable, you know, register for Smart Trader software. You know, full disclosure, you know, we're an affiliate of Smart Trader software. But learn to do these things, right? So that way, when you have the opportunity, you do have money saved up, and you are able to get in there, and you are able to start trading, that you're going to be a better trader, right? Life happens, and life will give to you, but you have to put in effort to get it, okay? And it's nothing that anybody else done. None of these traders, George Soros, Warren Buffett, you know, none of these guys are any better than you or any smarter than you. The only thing that they got that's over you is that they have experience in trading, and you probably just don't have that experience yet. Even myself, I mean, I'm not better than anybody else, and I was probably the textbook worst trader there ever was, right? And I still make mistakes every now and then here today. You see me, I put everything out here for you guys to see, because I want you to see my mistakes, and I want you to see how I go back in and correct it, because this is real, this is reality, right? And if I can do it, you can do it. It just takes effort. Anyway, listen, man, God bless you guys. I will see you tomorrow. Hopefully, you know, you guys tune in to our $100,000 to $100,000 challenge. That's going to be around 5 to 5:30. I really got to kind of get that time down. I know it says 5 o'clock, but usually it happens around about 5:30. But at any rate, we're going to be doing that again tomorrow. And then, of course, we're going to be doing our London Open every day at 3 a.m. So, once again, take care of each other. Take care of yourself. God bless. I hope you make a ton of money today trading. And I will see you next